minus 8 minutes. 8, 7, 6, 5, 4, 3, 2, 1, 0.
Hello, good afternoon, and thank you for joining the third edition of our Botscreator Meetup. I'm Arthur, and I work at Bots. I help with the Botscreator department, and today we have a very special guest, Damien Voorhagen. He's from Dema Trading, and he will be joining us today and also talk a little bit about what is Dema Trading, what do they do. Can you give us a brief overview of what Dema Trading is?
Sure.
I guess know a little bit who you are.
Yeah, sure. With the background included, or
Let's just start with a brief overview. So
okay, cool. We started Dema Trading because we wanted to help people to bring out their own bots. And I noticed a lot of people had headaches with connecting to APIs, or they didn't feel confident enough that the algorithm they had could actually be published and could invest millions of dollars. So we wanted to help people, to educate them on algo trading, and to take a part of the hassle and headache away for them, and then help them to publish the bots.
Wow, that sounds very nice. We'll hear more about this later. First, I want to give you an overview of what we're going to be talking about in depth today. Obviously, we're going to be talking about what is bots, because most of you are already aware of what bots is, but some of you will not. We're going to talk about what is algorithmic trading, cryptocurrency, stocks. So basically, we're going to be talking a little bit about what types of assets you can trade. How do the algorithms actually work? How do they make their decisions? How can you improve them? We're going to be talking about how to connect with bots. Obviously, also very important for you, the bot creator, to be able to get connected to bots and put your algorithm on our platform and conquer the world with your algorithm. We're going to be talking also about the Bots League, and of course, obviously, we're going to have a good insight into what Dema Trading is and what they do. So first up, I want to give the new people a little bit of an introduction into what is Bots. Bots is a new type of financial platform which allows users access to algorithmic trading, which is something that is in general quite hard for a small retail investor to actually make money with trading, because most retail traders, they trade by using their own judgment, and statistically they don't do that well. Big hedge funds and banks figured this out years and years and years ago and switched most of their trading to algorithmic trading. However, those algorithms are usually very expensive to develop and hard to access. So this is where two worlds come together, where the user gets access to a very valuable way to increase their own assets, which is algorithmic trading, and the algorithmic writers, they get paid for hosting their algorithm, and when people actually use it and put money on the account. The vision was to make it not only obviously there's lots of different platforms that do provide algorithmic trading services. However, one of the biggest problems with most platforms is that they're quite complicated, so it's not really as evident for everyday users how do you actually get started. Because it sounds very cool, but if it's a very complicated process and you need to understand how everything works, the majority of people will be more hesitant to use it. And we have made the app in such a way that it's usable for everyone, and that you can literally give your phone to your grandmother and she should be able to get started with bots within the first couple of minutes. And this is really a very unique approach. Obviously, the marketing rollout has been really strong, and that's been one of the main, one of the reasons for our meteoric rise in the past couple of months. We blew past our targets for 2020, so we're hoping to do the same for 2021. We're going to be doing that by rolling out not only in Europe but also beyond. We're going to start in the next couple of months rolling out in the rest of the countries of the EU, where obviously the platform is supported and allowed by legislation. One of the cool things for bots that's coming up is that we're in the near future we're also going to be offering different types of assets. Now we are mainly trading in cryptocurrencies, but to this we will also start adding things like forex, commodities, so think of euro-dollar exchanges or use oil or different stocks, because we actually have already quite some an interesting product that's running in that's an experimental product, which is Tesla. And we'll be adding similar products in the near future. This will give a lot more options to the traders out there, because not all algorithms work the exact same, or they might work very well on forex, but they just don't work that well in crypto. We can transfer these to our platform now too, so that the users can also choose whether or not they want to invest in crypto or they want to invest in different types of assets. In the next 2 weeks, we're going to be having a competition as well, which is already behind me. It's the Bots League, and we'll be going into depth about that a little bit later on at the end of the episode, to make sure that everybody understands how does it work. We're offering really cool prizes, so there's a really big incentive for you to join. Obviously, it's good to get your bot on the platform, but also the prizes that we offer are really cool, and the chance to interact with our community will certainly be a benefit of you. I wanted to talk a little bit with Damien today about what is demo trading, and who are you? We had a really brief overview, but can you tell us a little bit about how you got started? How's it going with demo trading? What's the background? I mean, can you tell the viewers a little bit more about that?
You want the long or the short version?
Well, we're slightly strict with time, but let's give it a good couple of minutes.
All right, cool. Initially, the company started because I was investing as a student. I invested in some stocks. I loaned some extra money, not recommended, by the way, just that I have it set. And I noticed that with the loaned money that I got like a couple % per year, which was nice, but as a small investor, it doesn't really add up in the end.
Yeah.
So then I was hungry for more. I think more people are familiar with that idea of the hungry monies. So then I went on to trading. You read these stories from the people that trade, like if you do 1% per day and you start with 1,000 euros, at the end of the year you have like 5,000 million after 3 years. And I thought like, wow, okay, that's so cool.
I want that too.
Yeah, I want that too. So I started with Forex trading. Obviously, it's not that easy. So for most people, it's not really recommended at all. And from Forex, I went into crypto because the market, Bitcoin was starting to rise. It was cool. And I really liked the innovative part and the tech part. And from there, I figured, if I'm in the tech market, why don't I start working with algorithms and actually start automating what I do? And we can measure it. If I go to bed, I wake up, trades are still happening. And the whole idea of automated trading really attracted me. So
how did you actually get to, like, how long did it actually take? Like, you're talking about quite a long time period. For the viewers, like, how long did you, like, it's not as easy to get started with trading. How long did it actually take for you to get a hang of it and to get into this position where you are now, where you're working on algorithms?
Let me think. I think I started loaning when I was 17, and then
wow.
I started trading. I think around 18. I've always been a fan of, don't do too much reading. Just, try to get a little bit of the basics and then just jump in. Try it, fail, learn, adapt, improve, repeat.
Yeah, and the success didn't come within the first year. Just so the viewers know, you can try manual trading, but
manual trading. I mean, manual trading and algorithmic trading. It's actually quite hard. It's definitely not something that you can unless you're like a real special case. Most people cannot make it profitable in the short term, medium term. Some even never get it working. But I started reading. I bought a little online course that covers the basics. Okay, because I didn't know what a support is, what a resistance is. We have uptrend and downtrends and breakout reversals, and those are typically the things that you start learning if you get started. And on the go, I started learning about indicators and how you can use them. And then I thought, okay, I can start looking into automation. And then you start looking at drag and drop builders. Then you find out that they are really limited, but then you need to learn to code. And, things moved one step at a time, and it got deeper down the rabbit hole every year, so to say. And in the end, we started. I figured that if it was so hard for me to figure out, it should be easier for other people if we help them get started. And that's eventually how we ended up here.
That's very interesting. What is for you the next exciting? Can you share a little with the viewers a little bit like what's coming up? Do you have anything special planned? That's
Yeah, sure. I originally started demo trading with one other person, and last week we had another person join our company as well. So we were already with 3 people that's actually working on the company itself. As of today, we have, I think, about 10 people that we actually have as algo suppliers, as we call it. So that's actually people that we have signed contracts with. Because as you can imagine, you've been working on your baby algorithm for years. It took like a lot of blood, tears, and money to develop. So one of the things that people ask me always is, okay, how do I know that you don't actually share it? And one of the things that I say is, we sign a contract, an NDA clausule, where we actually say, okay, we don't spread your algorithm. And obviously, we also want to work with people not to get one algorithm live, but we try to, if they are motivated, to get at least 5 different bots with them. Yeah. But if more is possible, then that's definitely the target.
Awesome. So we're going to be seeing some interesting algorithms from demo trading coming on the platform soon.
Yep, sure.
Well, really looking forward to it. We're going to be you're going to see lots of updates about this. We'll keep everybody apprised when these algorithms actually go live, so you won't miss out. We touched on the algorithmic trading a little bit. I want to also go into give a brief flight over for what it actually entails. Might not be clear to all users. What is algorithmic-based trading? Algorithmic-based trading is basically a computer program that decides when to buy or sell a asset, and that can be a cryptocurrency, it can be stocks, it can be oil, or doesn't really matter. So you're using the computer to make decisions that humans you would expect to be less capable of, or get emotionally involved, and they want to. They might get a fear of missing out. They see the market going up, and we've seen lots of examples of those recently. I mean, Ripple, Silver, GameStop, Nokia, BlackBerry. I mean, it's especially last couple of weeks has been insane. And you see that most people don't actually make out that much. However, algorithms just look at specific values that you tell it to look at, and then it will either buy or sell. And you're not really trying, when you're making an algorithm, you're not really trying to be right every time. It's not that important. What you're trying to do is to win statistically. So unlike in an argument where you really want to be right, it doesn't really matter if you're right this specific point. Like if you make a big loss, or there's limits to how big the loss can be. Over the long term, you will make up those losses with extra gains. Because the benefit of the computer, obviously, it doesn't really have any other outside emotions. It didn't read the news. It didn't go biking through the rain, fell off his bike. The trader might be a little bit upset. So those are the really big advantages of algorithmic trading. So with algorithmic trading out of the way, it gives you a little bit of an overview. You can trade in different assets. And an asset is basically something that you can buy or sell for a certain price. And there is an immense list of different assets that you can trade on the public markets. But it basically all comes down to what is the supply, what is the demand for this specific asset to determine what the prices are. And in addition to just the supply and demand, you also have most objects have like an intrinsic value, hereditary to it, and that gives you like a theoretical bottom of where could the prices potentially move. As said, we at Bots, we work mainly with cryptocurrencies. We decided to start out with the cryptocurrencies because it's a very interesting market, because there's a lot of things moving. And as an algorithmic trading, you want volatility. You want the price to go up and down, because you want to get in on low prices, sell at high prices, and repeat that process all the way to the top. And cryptocurrency has just proven to be a very interesting trading vehicle in that respect. However, cryptocurrency is not for everybody, which is also why we have been planning to extend to different markets. And those markets were mainly the forex, the commodities, and normal stocks. For you who don't know, the forex is the forex exchange market, where you can buy and sell euros, dollars, yens, rubles, anything. And the commodity market is where you can trade, like, let's say, real assets like oil, or corn, or soy, or silver, or gold, or platinum, or all types of products like this. These can be traded on the commodities market. And the stocks are just the shares of the different companies all over the world. And we have a very interesting system that we're not necessarily limited by our location where we are in our geographically speaking. One of the most interesting things that we see, even though we are looking ahead at going to different asset classes, is the maturation of our crypto industry. Traditionally, in the past couple of years, it has been extremely volatile. Not that it's no longer volatile at all, but the more straight, the pure retail psychology-driven price action is something that seems to be dissipating a little bit more. And you can see that bigger players are stepping up, and when the value of especially the larger coins goes down, it doesn't necessarily drop immediately off a wall, hitting stop loss after stop loss and just dropping down like a rock. However, it seems to be more supported by larger players, and you see different types of volumes trading at different types of price levels that might scare the traditional retailer. So this should also, in addition to the crypto market already being booming, this should give it a little bit more stability and make it easier for algorithms to get into good trades on the long side of crypto currencies. That actually brings us to something interesting. We are currently trading in longs mainly, but recently in the news we've had quite a lot of rumbling in the markets about shorts. I can't really, I can't help myself but notice, but tell a little bit about it. It's GameStop. Everybody's heard it. I mean, yeah, that's it's just a company in the US. They buy and sell video games. They're not that noteworthy. They're losing money. All the stores are closed. But boy, did they get the news. And the funny thing is how they got into the news. As everybody's aware, social media has a massive impact on the way we live our lives. But now also Wall Street Bets from the social media platform Reddit has put its targets on short sellers. For those of you who don't know, a short seller is somebody who's making a bet that a share will go down. And it doesn't actually, there's a discussion whether or not it adds value to the market or it just takes value from the market. We're not going to go into that, but...
Wise decision.
But anyway, GameStop is a very popular store. It's something that people rally behind. It feels like it has a little bit of the Tesla vibe, for the gamers at least. And what happened is that there's a massive amount of shorts taken out on GameStop. And there is a specific channel, Wall Street Bets, who took note of this and said, like, hey guys, there's such an immense position of shorts that this exposes them to huge risk. Because if I have a short position, let's say I take out the short at $5, but the price goes up to 100, then I have to make up the entire percentage gap. And for those calculating at home, that's not 1 or 2% or 10%. That's multiple hundreds of percents that you're going to lose. And usually the guys who have the biggest positions are the hedge funds, which are traditionally seen as the bad guys of of the financial system by quite a lot of social platforms, and they decided to target them. How did they do that? By limitlessly buying and buying and buying and buying. What this has a name. It's called a short squeeze. It's when somebody has such a big short position that they can't actually sell it immediately when they want to, because they have so many shares. It will take days and days and days to sell all their shares, or in this case, to close their positions by buying shares. And this has caught quite a lot of people by surprise who had big short positions, because the price kept going up. But the problem is that as much like the more buying pressure there is, the more people are going to close their shorts, and this also adds to the extra buying pressure, and this can lead to massive fluctuations like the ones we've seen in GameStop. It's something that happens regularly, short squeezes, but this has to be one of the biggest ones we've ever seen. I think the only one you can compare to is, well, in terms of price action, maybe Volkswagen, which was a couple of years ago that exploded from 100 to 1,000 and then to 150 again. And what's interesting is that the Redditors, they didn't stop there. They didn't stop with just GameStop. They were looking at like what other shares are being heavily shorted, which are also name brand favorites like Nokia, BlackBerry, and interestingly enough, silver futures, which are also heavily shorted, and they're applying the exact same tactics to this. So it's really making good rumbling in the market and generating lots of volatility, which is, well, as I've said before, always very good for traders. And that was a little bit the news section. I couldn't help myself. I had to share that. It's very entertaining and very well, not necessarily entertaining for the big boys who are losing their boats, but it's very interesting for the rest of us. And I also want to talk a little bit about the inner functions of trading algorithms. How do they work? Because there is, if you look at the price chart, you will obviously you can see the price go up and down. But how does an algorithm decide? That's based a little bit on like what is the nature of the strategy. And there's lots of different ones, which can be trend trading, so that your algorithm is trying to identify when the stock market, when an asset keeps going up and up, and tries to buy in low to then naturally sell higher. You have mean reversions, which means that a price might be moving up and down between a band for very long, and just bounce up and down. All you do is buy low, sell high, buy low, sell high when you've identified this. This can be on lots of different time frames, and there's so many different types of strategies. We're not going to discuss them all. I think one of the most interesting developments would be to have AI is getting so much involved, because naturally, when I'm trying to come up with a new algorithm and trying to think as a trader, like, okay, what are the decisions that I would do, and what would be the basis for me to make either a buy or a sell or a long or a short. However, with an AI, you can like Atama, one of the upcoming bot creators is doing, who's also working with us. What they do is they turn on the AI, they give it all kinds of indicators, which is like a technical analysis, and it just let it decide for itself what is a profitable strategy, and then it comes out, and you can look at the code, see what it does, but the full understanding of what it actually does is sometimes a little bit shaky. So that makes for very interesting results. Maybe you can share a little bit, Damien, about like what kind of strategies does Dema use, and how do you decide on which ones to use?
Mm-hmm. Yeah, it's really hard. There's so many different strategies out there. Also based on different kind of data. Might be nice to explain that most beginner strategies that are made with candle data, right? So which is basically, for people that are unaware, is basically a summary of what happened per time period. And
is the one for the ones who don't understand, if you see those little square the rectangular boxes in the news, that's a candle.
Yeah, exactly. And that's typically what new people in the market are using, right? So they have indicators use the data from the candles and based on what the indicators say, they are doing buys and sells. And there are strategies that use like real tick data. So every transaction that is done on the market is processed, and that's a lot harder to make a model on for most people, right?
How come is that so much harder?
Well, it's typically, if you look at indicators, and for example, if you talk about the moving average, which is like the basic line that's showing the average price from, for example, the last day, for example, it's very visual for people to see. So it's really easy for them to think, okay, I need to follow that line and I'm going to make a profit. But if, for example, if you would look at Bitcoin data and you would look at actual ticks that are happening, actual transactions, I don't know the numbers, but I'm sure it's thousands per minute at least. So it's very hard to get a good grasp of what's happening in the market for people. And there's also people that use the order book data for the algorithms, but most people, they focus on candles and indicators. And then you have different strategies, as you said. There's what we call trend bots, which are kind of hoping to make an educated guess on what side the market is going to. So if we see that the market is slowly going upwards, then we want to go with the crowd.
Yeah.
And then there's reversal bots. So basically when the trend is going upwards and the trend bot is still following the crowd, then the reversal bots are looking at the market and seeing, okay, I think we're going to make a switch here, so I'm going to move out or I'm going to move in before it typically moves already.
They're trying to get into the market before it's actually starting moving.
Yeah, exactly. Trying to predict. Yeah, exactly. And if you combine it, then obviously you probably have a more profitable bot than doing them both together. And new people in algorithmic trading typically, in my experience, focus on trend bots because they're, I'm not sure if easier is the right word, but typically it's like at least easier to get started and to make a simple bot that's just looking to follow the crowd.
Yeah, exactly.
Yeah.
So you touched a little bit on this. Like, is this something that you're proactively trying to do? That you could not only put one algorithm out there and let that trade, but also make it combine with different algorithms? And what's the reasoning behind that? To use two algorithms in one.
Well, I really like having multiple kind of strategies with multiple kind of bots, and if possible, even different variables, because it's a very nice spreading of your risk.
Yeah.
Right. If you have trend bots, reversal bots, combinations of it, maybe some sort of AI bot. I'm not really too convinced that that's working properly. At least on, for example, tick data, indicator data, it might work. But if you pick different bots, it's a really nice way to spread your risk, and you might end up profiting a little bit less than if you went all in on that one bot that did like 500%. But averagely speaking, if you invest in like different kind of bots that do different kind of things, different coins, different markets, it's just a lot more risk averse, and that's typically what I would recommend, at least.
Yeah. So your recommendation would be for somebody like, let's say somebody is starting out. What would be your like conclusion to say like, okay, a good way to get started is should they immediately start combining algorithms, or do you think it's better to pick something and just try to get that working? Like, how would that be for somebody who starts
as a bot creator or as an investor?
Yeah, no, as a bot creator. I mean.
Okay. Yeah. So, I mean, often when people get started, so we also help people that have like no experience. We're kind of developing kind of a I would say a tutorial for that, or maybe like a crash course.
Yeah.
So one of the things that I typically do with people that are interested is that I say, take a trading view map, for example, and look at the chart. And now if you wanted to make trades, but you could already see where it would end, can you tell me where you would enter the trade and where you would exit the trade? And then what you typically see is that people end up giving you trades that would be trend bots, right? And if they understand what's actually happening there, we can start to see, okay, but if you see that those are good trades, can we already figure out a way to make a program that can recognize what you would do and try to code that in?
Interesting.
That's one of the things that we start with.
Interesting. So, how does that actually work? Well, we actually had this plan for a little bit later, but like, who are the people that you work with? It varies, I understood, but
yeah, it varies a lot. Yeah, we have. I would say that we have. I think basically three kind of categories of people. So we have people that are really not experienced at all, right? So they come to us and maybe they have traded a little bit or they did some coding stuff before, but they don't really know how to get started. And for that, we developed a quick start, right? So it's basically kind of a tutorial course, and where we tell them, okay, you can follow this plan to get started. And while they're asking questions, we update the tutorial and we try to improve it on the go. Then there's people that already are more advanced. So they've made some bots before, they know how it works, but they're really looking for someone that can help them with optimizing, for example, which we can with machine learning that we developed. And they can make the bots, but for example, they don't want to focus on having to connect to an API and having to host a server. And what if things go wrong and you're on holiday? They just want to focus on algorithmic development. If they have something, they can talk with us. We can evaluate how it works, and then we put it on the server. We do the security. We take everything away for you, and you just get paid on a monthly basis from the revenue from the bots. And there's people that already are like full algo traders, that are trading firms, that they have everything figured out, but they don't want to bother going to another market. So we just partner up with them, and we take care of their algorithms on other platforms.
Interesting. So you try to really make sure that it's not spread out everywhere as well.
Yeah, exactly.
That's very good.
Yeah.
Well, I think what I think is one of the more interesting parts, like as we discussed a little bit, like how do you decide what type of algorithm you're going to run, and what type of strategy, how you want to develop that. I think one of the most interesting parts of optimizing your algorithm is how do you get it to make profit? Because when you make your initial strategy, I always tell my programmer, don't expect to make a profit on the first try. When you backtest it, it's always going to fail. And if it doesn't, well, hallelujah, that's very nice. But like it's not a guaranteed reproducible result. Mm-hmm. So what's one of the biggest parts of making algorithms is not just specifically saying like, okay, I want to be trading based on this, but also to change the variables around. What kind of numbers, what kind of values are you going to assign to this? And there's lots of different ways to do that. I'll admit personally we do it in a pretty unsophisticated way, where we just give a list of like, okay, we have a range of 0 to 100, and we'll go at it and try every single combination you can possibly think of. And then the computer goes brrr, like the printing machine in the US. though it's burning like electricity, not really making any money yet. So I think, well, I was actually very interested. Like, how do you train it? Like, what kind? Like, I'm hoping you do a little bit more sophisticated optimizations and variable sweeping.
Yeah. Well, I mean, so our team has a background in machine learning and artificial intelligence, including myself. So we know kind of the basics. And, one of the problems is that we could, for example, feed it like 5 years of market data. But what typically happens is that if you fine tune your algorithm and say, okay, find me the most profitable algorithm you can find, on a 5-year basis, you could probably make like 5,000 million %. And then if you actually put it live and test it, you will see that it's completely overfitted, right? For people who are unfamiliar with the term, it basically means that it worked very well in the past, but it doesn't work in the future. Yeah. It's basically like training an algorithm to find the Brexit, right? And if you ran it before, it could find the Brexit really well, perfectly, but the Brexit will probably not happen again. Yeah, right?
Unlikely
that's the way I explain it, right? So that's one of the things that we look at. Okay, is the algorithm not overfitted? And then another problem that you have is, okay, we can import 5,000 indicators and then let it run from 0 to 100 for every indicator. but that ends up being, I don't know, even by heart, but like billions of combinations. So you would really need all the computing power of Google to be able to run that. So that's not an option too.
No, they're not going to lend you the server. That's that's a little bit unfortunate.
And we would probably blow it up too. That wouldn't work at all. So currently what we do is that we have multiple ways of making this happen in a proper way. So one of the things that we don't do is optimize our algorithms for profit only. Typically what you see is when you optimize an algorithm for profit, that it starts getting really high profit, but it tends to overfit. So one of the things that we do in order to decrease overfitting and to make it more safe for investors on bots is that we also look at optimizing for multiple variables. So obviously it has to include a very light weight for profit because we don't want it to go to negative profits. But we also look at, what is the drawdown per trade, for example? So not even overall, but per trade, so we can minimize the losses on every trade. Or we don't even optimize the specific indicator values, but we look at, currently the stop loss is around 5%, but what if we put it from 4 to 6%? Maybe you find that if you put it to 4%, you cut the losers faster, so you have less loss on your trade, and you're also able to enter a new trade faster. And we also look, for example, at the amount of trades. So typically we prefer our algorithms to trade a little bit more so that it's not dependent on that one very good trade, right? Because you will see some algorithms that trade, for example, daily, but then after a month you find out that it did like 25 losing trades, and then 4 were slightly profitable, and there was one very big winner. So we also use multiple loss functions, as you call it. So basically the standard that we want to optimize for, so that we can equalize the profit per trade as much as we can.
Yeah, so you don't get these wild rides where one is like you're doing 10 trades with a 0.5% profit, and one just 5% down to 10%.
Exactly.
That's
so like a basic example for newbies, so to say, would be that if we could pick a value from 0 to 10, and we found out that the 5 would be most profitable, but the most profitable trade would be like 100%, and the overall profit would be 200%. But if we put in a value of 7, then the most profitable trade would be 10%, but an overall profit would be 150%. It's still a little bit less than the other one, but in real life it will probably work out a lot better because it's just more consistent, and consistency is what we're after. Yeah,
because most users won't be too happy when they're seeing like really big drops in their account. That's not
And it's also always on backtesting, right? So on backtesting, we made that one very nice trade of 100%. But it might be that if you put it on a live environment, then you actually see that in 2 weeks it's actually going to minus 50%. And typically people don't like seeing a loss of 50%. I've noticed in the Discord.
They seem not always very happy when there's a small downtick.
Exactly, but it's part of the game. Most people, they want more and more profit, but typically if you want more profit, you have to take more risk, and more risk means more drawdown that you might suffer, but not necessarily, but it's possible.
But what to bring it up anyway, what is for you an acceptable risk as a drawdown?
So we don't have a very fixed number because we also look at the profit. But typically I would say that around 20%-ish is kind of around the mark that we're aiming for. But we look at multiple variables. So we look at the amount of trades that it does on a monthly basis, the profit. Obviously, if it only slightly outperforms the market standard, right, the buy and hold strategy, as most people know it, if it only does a slightly better, we want the drawdown to be a lot lower. But as I said, if the risk increases and the profit increases, typically it's okay if it has a bit more drawdown, but it has to be communicated clearly to investors.
Yeah, obviously, we're trying to make it trading accessible to algorithmic trading accessible to everyone, and not just like the people who really understand the description. And well, it's though for private for your private portfolio, it might be very interesting to run like risky algorithms and say, okay, I'm going to deploy 10 algorithms, 9 are going to go completely bust and lose everything, but this one guy, he's going to make my entire portfolio.
Yeah,
that might be interesting for like somebody who's doing the algorithms themselves, but for everyday users, nobody wants to see a drawdown of 90% or 80%. Yeah. So that's just
exactly.
It's not like especially for like the common man, that's just not the way you want to see it.
I think it's kind of the same way that most angel investors are investing in startups.
Yeah.
Right. A lot of angel investors, they, for example, they have I don't know, 10 million to spend, and they just put $500,000 in 20 startups, and if one of them makes it, they can times 50 their investment, and because they have so much funds, it's okay for them if they lose them all. It doesn't even matter. But your typical investor, your average person, they would not want to spend all their money in one startup and then lose it. They'd rather have more safe investments.
Yeah, I get it. Like, that was interesting. There's quite a famous book. It's Successful Investeren in Startup, which basically is a Dutch book that translates to Successful Investing in Startups. Yep. And they're always talking about the exact same thing. They're saying, okay, you're going to do 50 investments and 45 are going to lose everything, but there's going to be these 1 or 2 that are going to make you a lot of money.
Yep.
And obviously, angel investing is also not for everybody, as is the case with algorithms that take very high risks. So, well, for now, at least they're not available on the App Store. Don't worry, we don't have algorithms that should drop down to such significant numbers that should scare away customers or anything like this, or give any kind of fear. Well, obviously, we're not just a platform where you can buy the algorithms or use the algorithms, I should say. You can get connected with us. That's what this is obviously all about. I want to tell you a little bit about how we actually get connected. How do you? When you've successfully backtested your algorithm, you've optimized it, and you're feeling like your algorithm is ready to get deployed. This is where you can get in touch with bots, and the way we work is that rather than you sending us your algorithm and putting it on our servers, we respect your privacy and your intellectual property by working with the API trading. What that basically means is that when a bot creator is trading or the algorithm is running, they're sending signals to our server, which we then distribute through our customers. This has a big benefit of that the bot creator has more security of their own product, because well, the algorithmic trading industry is a very competitive one. And there's very clever algorithms out there who are specifically looking for other algorithms to, take their profits, basically. They'll try to do front running and try to take the other side of the trades to just try to lessen the profit of that specific algorithm. So it's very important that these things are isolated. So this is why we're working with the BEM API. It's relatively new. We've implemented this in the past couple of months. And most of the new bots will be running on this. Also, all Damien's new bots are running on this. This does mean that you do have to do the hosting yourself. So you have to set up something like a virtual machine as a bot creator, or rent some hosting, or put up a server yourself. That's obviously also a possibility. And then you have to pull in the market data yourself. And trade based on this, and send us the signals for the entries and exits of the positions. How do you actually get connected? That's obviously to get connected with an API. You're going to need an API key. These are very conveniently generated in the Bots app itself. We have a special environment in the Bots app which you can enable in settings, which are the developer tools. And here you can generate your own API key. You can pick the name, pick the team, pick your team name, pick your bot name, and give a good description of like what does your bot do. And this generates an API key which you can then use for testing out your algorithm. Because what's important to understand is that, let's say you have a successful bot, you've managed the hosting, you've created a bot in a bots app, and you're ready to start sending signals. You're not going to go on a platform immediately. You're going to go into a paper trading environment, which is specifically designed to mimic real life market environments. So it doesn't just receive a signal and say, okay, they asked me to buy, I'm going to assume that I will get the fill, and there we go. It actually looks at what kind of orders are you sending, and is that an order that could realistically fit in the market, and if not, what would be the result of that? So it's a very good representation of what will happen. The quarantine period is what happens in real life is very well mirrored in this in the way that we do this. The reason for that is we do this for a month. We call it the quarantine period. The reason we do it is that when somebody sends us, for instance, they send us backtest results, they might look very good, but in practice not really work that well. The only way for us to test that is to actually pump in real market data and just to let it roll on our paper trading environment, so that we can analyze whether or not it makes a profit. Does it take very risky trades? And like this is something that we don't want in our platform. It doesn't make. Are the signals coming through? Is the code itself making mistakes? These are all steps and checks that we do during the quarantine. Needless to say, this is something that extends beyond the quarantine period, that we monitor and check the signals and the orders, how they are processed and executed. During this period, your strategy is analyzed by a couple of automatic systems, and they will either give a go or a no-go. So that's in addition to you having to make a profit, it has to get flagged as okay and safe. It will get assigned a risk value, which the users can see. So if your algorithm is a daredevil and likes to get messy, then you're going to get a higher risk rating to go from 1 to 12. This basically helps the user to estimate whether or not it's a fit for them. Because let's say you're sitting on your life savings and you don't want to go back to work. Basically, you're already retired and you're trying to be conservative. Then it makes a lot more sense to do a little bit more low risk algorithms rather than the high risk. Or if you're a little bit more, or if you're a little bit younger, and then, the world is your oyster, you can still take a little bit of risk, then this makes a lot of sense for them to use. But it's important for you to realize that we do give these values with specific reasons. So if you want to attract specific audiences, because not all audiences are going to be drawn to the same type of trading. If you have a very risky bot, this will attract more younger people, and more stable, low-risk bots are generally attracting older users or people who like to play it safe a little bit more. And it's very important for you to decide what kind of audience do you want to engage, or maybe you want to engage both of them, and then you can put different bots on the platform with different risk management strategies, and then you get a low risk rating. The first step from that is once everything is clear, you go on. We put you through the marketing machine, as we call it. We'll be making posts. We'll help you with descriptions to make sure that everything is 100% smooth and everybody understands what does your algorithm do. It needs to be so clear that everybody understands it. We always help with making sure that everybody can actually understand it. Then you go live on the platform, which obviously is a big celebration, noteworthy event when you're actually promoting your first bot. And during this period, you're going to be, especially when you're new, you're going to get a slightly lower market cap. And a market cap is how much people are maximum allowed to invest into your specific algorithm. And we do this partially as a safeguard for a liquidity model, but also to safeguard the assets that we don't want too high of an exposure to algorithms that are brand new to the platform. For instance, Damien, he's been on the platform, well, how many months? For, I think 5 months or so since you've...
the first bot? I think we're close to a year.
Okay, well, there you go. So we're not that worried about... we're not that worried anymore about Damien. I mean, he's a good guy, and the algorithm seems to be working very well. But obviously, we make case-on-case decisions about this because we want to limit the exposure to new risks. This is not only like saying which algorithms go on the platform, but also which algorithms are going to get a larger market cap, yes or no. Because you need to see what is the trading behavior, and the only way to do that is real time and look it over a longer period, because otherwise you can't really make that judgment call. As a final thing, you keep increasing the market caps based on like reputation, and if that's possible for the liquidity model, because you don't want to have an algorithm that's too big. But as a closer, I would like to say that it's really important how you communicate with your customers. How do you sell your algorithm? How do you make it clear what it does? And is it exciting? Is the title funny? I mean, a very inspired bot name is much more likely to attract more users. Like the Big Friendly Bot, that's one of the bots on our platforms. It sounds very funny. The Mamma Mia is has a funny name. Thunderbird, and like these are all bots on our platform, by the way. So you can start them right now. Go to the Bots app and open them up. But we see that this really impacts how much assets under management you as a bot creator ultimately collect. And what I wanted to finish off just a little bit with one last question that I had for you, Damien, is what kind of person would you say is like, if they're watching, what it would be like for you to trigger to say like, please give me a call? Do you have any ideas or defined strategies? We touched a little bit about it, but can you say like, speak to your audience? Who do you want to give you a call?
Well, I think actually everybody that's interested can give me a call. It doesn't really matter if you don't have any experience and you want to learn, or you already have some experience, but you would like someone to talk with about the concepts that you have, or you already have algorithms up and running completely and you would like another platform, but you don't want to bother your own developers with setting up other servers and new APIs. And I think that everybody can at least get started with algo trading. Obviously, if you have no experience, it takes a bit of commitment because you do need to learn how things work. You don't necessarily need a lot of code experience, especially with the quick start that we have. But as things move forward, you do need to learn a bit of these things. And I think it's not very hard to learn, but you need to be willing to.
Yeah.
Right. I think it's kind of the same as learning a new language. I think even learning a full language might be a lot harder. We do most of the things in Python. And even if I let some simple scripts, I show them to people that have no coding experience at all, they can typically tell me kind of what's happening. So it doesn't really matter if you have no experience. If you really want to get into it, you can contact me on the website, on Discord, where you can find us. It's both dematrading.ai, both the website and my Discord name in the bots Discord. And if anyone has any questions, they can always ask. And if they don't want to move forward, that's fine too. I'm not charging. I'm not charging for intro calls.
You're not hourly.
we don't charge anything on an hourly basis. We do everything based on splitting the profit, because the more things we do together and the better it works, the better everyone has a profit. And if we charge per hour, for example, you might end up paying a lot for something that doesn't get you anywhere. And that's why I think this is a really nice model that we have.
Yeah, it's less of a big commitment upfront where you don't have to fork over hundreds and thousands or thousands of euros.
Yeah, exactly.
To get something rolling.
Exactly. Yeah, you can always just chat with me. A lot of people, they message me on Discord as well with questions, or they just want to get some inspiration about ideas, and that's what I'm here for. So you can always feel free to message me, and if you in the end think this guy really sucks, I don't want to talk anymore, equally good friends, and we'll just continue without each other.
Fair enough. So you can reach Dema on Dema. You can reach Dema Trading by Damien on the Bots Discord. You can also go to his website dematrading.io.
.ai.
AI.
AI from artificial intelligence. Yeah.
Yeah. And so we actually had. I want to move on, and we had a couple of questions we want to answer. And one of the questions is why some bots are arriving later than previously announced. So when we do an announcement of a bot, we are obviously we're super excited, so we want to share what's coming up. Though we have really strict security protocols, and those security protocols cannot be rushed. And if certain parameters are not met or we are not satisfied, these bots will not go online. And this might be, obviously, I can understand it could be disappointing, but we also don't know in advance, like, what are the results going to be of this testing period. And like I said, we have this quarantine period for a very specific reason, that we need to check how does the algorithm work with real life data, not just simulated data, not backtesting, but with real data that we get in every day from the market. And if signals are not coming through completely, or they make trades that are outside of parameters, or any host of reasons, they might have accidentally sent a buy signal or a sell signal extra, made a mistake in the order IDs or anything like this. We will not put those algorithms online until all issues are resolved and we can confidently say, okay, this is going to be fine. Then we can take it out. Then we can take it out of the paper trading environment and make it available for all the bot users. And I also saw another question that was asking, like, why is my bot not in a position when I've already started the bot? What's very important here to realize is that not all algorithms trade on a daily basis, basically. So when you start your bot, let's say you started your bot on the 1st of January, but the first time that the algorithm recognizes a trade is on the 14th of February. Then you're going to have to wait all those days until something actually happens. Just because your algorithm is sitting still doesn't really mean that it's not working or it's not doing anything. It could just be waiting for the right moment. And we actually I have recently backtested a very specific algorithm that trades 6 times a year. It's very little, but the returns are really good. So I still keep running because, the returns are really good. So we're putting that live and not on the Bots app. But this is something that you need to take into consideration when you're trading. And like, let's imagine Damien has his Bots app and I have my Bots app. Damien gets in today. And tomorrow the bot signals a trade and he gets triggered. I hear like, oh, Damien is making profit. I'm going to buy that same bot. That doesn't mean that I'm going to automatically get into that trade, because the entire reason that you let the bot decide is that the bot decides how much profit to take. And if I jump in halfway during the trade, then that means that I'm basically trying to time the market, which is exactly what we're not trying to do. We have one more question. So that's a question about if the bot creator switched to a ... coin. He bought it the week before, and they bought it in private, and they pump it up. What is the fear for? Like the fear is, will the users lose a lot of money? And the point of an algorithm is not to buy and hold. And what happens with pump and dumps is that you have a buy and hold strategy that, yes, this can happen that you lose a lot of money. However, an algorithm, a trading algorithm doesn't work this way. So most trading algorithms don't actually respond to pump and dumps. So recently, you could have actually seen this in the app as well, because there were a couple of coins that were going pump and dump, like Doggy Coin, for instance, or, well, there's a myriad of other cryptocurrencies. I don't know them all from the top of my head that went berserk in the past 2 weeks. But they explode straight up. And that is not a signal that is recognized by the algorithms. So they don't actually get into that trade because they see it go up, but there's no reasoning or whatsoever for this trade. And chances, well, it's not a guarantee, but chances are very high that the algorithm isn't actually going to register it unless you have trading strategies that are specifically losing for this type of momentum trades. And we got a helpful tip from Marco, XRP and XLM. XRP, that's true. It actually got a nice little rebound. We had a month ago or so that it also skyrocketed and then crashed massively. And well, the Redditors are hard at work on trying to get Ripple up to the moon. So this is also one of the most more interesting movements in the past period. If you have any questions, or we're nearing the end of the conversation, if you have any questions or comments or topics you would like to have discussed in the next Botscreator meetup, please put them on the comments so that we can actually make our program tailored to all your questions and topics that you might want explained. If you have very specific things, for instance, you say like a VWAP, that's something that I hear is used a lot, but I've never heard it explained, please get in touch. Or if you have any other suggestions for guests, I'm very happy that Damien, one of our bot creators and from Demo Trading, got to join us today. And if you have any other suggestions for other people, guests that we should invite, we're definitely interested. So please let us know. I would like to close with the Bots League. It is getting very close to getting started. So if you haven't actually have registered, but you haven't actually made a connection to the platform, please get in touch with us today so we can help you through the process and make sure that you don't miss out. The league starts next, I'm saying this correctly? Yes, next Friday, on the 12th of February, sorry. And it's going to run for approximately 3 months. We're going to be calculating, we're going to be looking at the scores of the people. We're going to be sharing that every 2 weeks in Bots TV. And you'll also be able to see the results of the Bots League live in the app. There's going to be a special category for it where you the user, can see where what the ranking is of the bots. You'll also be able to see Damien's bots. So if he's performing really well, that would be wonderful that you can see him right at the top. If he's not, then, well, yeah. Right?
Nice.
You need to work a little bit harder.
Yep.
But there's three. We have a couple really big prizes. We have the top 3 prizes are 3 cash rewards, which is 2,500 euros, 1,500 euros, and 1,000. And in addition to this, we also, as we are a bots platform, we are also geared towards creating assets under management for the algorithm that wins the competition. And that can range all the way up to 250,000 euros assets under management for you to trade with and generate trading fees off. And that was it for it. That was it for the Creator Meetup for this week. So please tune in next time, and any questions that you might have, please let us know. Damien, thank you very much for coming. Hope to
Thanks
see
for
you
having me.
again. No problem. And well, we're going to be seeing more of him in the league, but also on the platform very soon. His clients are ramping up, and what I've heard is we're getting very close to seeing a lot of bots on the platform.
A lot of bots.
Excellent. Well, thank you, Damien, and thank you for watching, and I wish you a good evening.